Good morning, everybody. Make sure everything's working. All right, if you could let me know if everything's working, that would be great. Just shoot me like a 1 in the chat. What's up, Nia? All right, perfect. All right, so I hope y'all had a safe day yesterday. Price ended up hitting our full target. So with that being said, and there's no news coming out till 6 o'clock. So we're gonna see, what price wants to do. All right, how's everybody's week been? Let me know in the chat how your week's been so far. Neutral, all right. I didn't ask what your bias is today, right? So how was your week, JP? Yeah, we'll look and see if bearishness is what we're gonna look at, and what asset are you even referring to? Bearish. DXY is definitely bearish, at least for the time being. But yeah, we'll see. Yeah, which market are you referring to, JP? Appreciate y'all hopping on, by the way. Sorry, I got some shit I had to do real quick. But yeah, NQ. Yeah, well, before we get to that, let's take a look at this, right? The overall landscape that we're involved in terms of news. Obviously, the response yesterday was, indices running higher. Now, we got to obviously continue to observe what this volume imbalance is going to do that we talked about. Price is fully delivered into it. From India, I love your videos and analysis. I appreciate you, JP. I appreciate you spending some time with us. I think I've seen you on before. But yeah, you're from India. Shoot, love from the US, right? Yeah. So appreciate you hopping on. So, like I said, we have news at 6. Then we have more news, my favorite news event, on Thursday. And then, of course, we have the PC price index on Friday, so that should be kind of interesting. But yeah, so now that we have the landscape, let me flip through, make sure I got everything. Let's add one more. So yeah, we were calling for the DXY to give a retracement since we were back here. I was talking about with my private community the other day. I think I was talking about this on the live call on Sunday as well. That this fair value gap here, this area up here, the midpoint of this weekly wick, and just the range with this monthly fair value gap, if price is going to want to continue to drop, it's going to have to leave that available, right? It shouldn't have to come deeper into this. It may, right? Because I mean, there is a possibility for it to come all the way up into here, which if that takes place, then obviously the indices being bearish will be something we will see as a result of this run higher. But if this here should act as a potential balanced price range, right? It shouldn't have to get through that if we're going to continue to be bearish. It should be able to leave this open. Part of the reason that fair value gaps get left open in many cases, either there is a PD array that you're not seeing that price decides to utilize instead of the fair value gap, or there's a balanced price range in close proximity to the unfilled portion of whatever fair value gap you're looking to engage off of. So in this case, the upper portion of this fair value gap, as well as the weekly fair value gap, should be able to hold, because if we go to this monthly fair value gap, or this monthly time frame, we see this fair value gap here that's overlapped with one large bearish candle. So there's a fair value gap bullish that then got totally swept through with this one candle, basically trading all the way through it. That creates a balanced price range. And we're looking at this fair value gap here on this monthly chart. If we scroll down into it, we also have that weekly fair value gap. Prices delivered up. This should be able to reasonably give us, if DXY is going to continue going lower, it should be able to give us that as a balanced price range, and this should be able to leave the upper portion of this fair value gap available, right? If that doesn't take place and price just starts ramming through it, then obviously we have to potentially adjust. We have hit this monthly fair value gap. I mentioned on one of the previous calls that when a higher time frame level is met, right, a PD array opposed to whatever it is you're trading, in this case the downside, if the opposing PD array is met, right, or one that can potentially act responsively, that's when reversals can take place. You can see that taking place here. Okay. And this happens all the time. So guess what? We took external range liquidity, like I mentioned on Sunday. So now it's not unreasonable for them to want to come up and seek internal range liquidity. We have that balanced price range idea to kind of use as a backdrop. So that can help us anticipate price, potentially leaving that available. If not, and, say we start to see price really gain some interest to go to the buy side, then obviously we have the monthly fair value gap levels. We have the quadrants within this weekly fair value gap. But ideally, we would like to potentially see this hold if it is going to continue this march lower. And then, maybe even get excited enough to fill in the whole monthly fair value gap to the downside. The quadrants all within that are also potential targets to consider if price does react to the downside here. And then, of course, we have this weekly fair value gap that's also pretty available. We'll see if this rate on this liquidity here that triggered this retracement, if this is going to then be used as the catalyst to send price lower here. There's not really much news that's going to be too impactful for the next 2 days. Obviously, there is news, so there's going to be some volatility. But we'll see if it takes the red folders to kick into place to see if that's needed to give us a strong delivery for one of those circumstances. So yeah, before we spend too much time on the DXY, we could see that the yields are rallying here. They've had a pretty aggressive run to the buy side. So that makes me feel like we may have a likelihood, if this continues, to see this end up dragging the DXY into those upper levels I mentioned. So we're going to keep that in mind as well. Let's go to the weekly real quick. I said that on Sunday, if price was to violate this high, that's violating multiple PD arrays along with like this midpoint of this wick, this fair value gap here, that's violating multiple PD arrays to the buy side. And I said if that takes place, this high on this candle may end up being the target, and then of course that new week opening gap as well. We could see that has pretty much gotten real close to blowing that out. Those levels have not held to hold price to the downside. So for now, it seems as though, this response from the lows down here, I believe there was SMT as well that I mentioned at these lows, right? From this low to that low. If you drag that over, let's take some annotations off. We also see the wick responsiveness here. The midpoint of this large wick is held, and now we've taken out the buy side here, sweeping this high. And again, we have that SMT. So we're going to continue to monitor to see if this is what's going to continue, because if that's the case, DXY may get some legs and start running to the buy side. Of course, that's further confirmed if the DXY ends up really blasting through the upper levels I mentioned a second ago. And then, of course, we got equilibrium, right? You take this high to that low. That's the most recent high and low, swing high and low within this delivery. It was also the most energetic. So that's why we would use this range on this time frame specifically for our outline of the higher time frame premium and discount idea, right? So equilibrium's up here, so anything above that's premium. We'll see if it wants to try to get up there. If it does, and then ends up showing evidence that it wants to follow the yields, which are marching higher right now, then a picture may start to get painted, and things may adjust, and then further confirm that the indices may end up giving a turning point and start favoring the downside again. Overall narrative has not changed, right? It's still just a retracement in here, and that retracement is just running up to some type of premium array. Which premium array, right? We got the fair value gap, we got the volume imbalance. But for the most part, at the current moment, it is Tuesday. So we'll see if this run higher is just to maybe set a high of the week, and then maybe start to march lower if DXY does gain some legs and start running higher alongside the yields that are marching higher. We also look at the bonds. This influences the foreign currencies, and it also impacts heavily the indices behavior. And we can now see that price has declined, swept out the lows, as well as the fair value gap that I mentioned could be the line in the sand, where if it's broken, may lead to this continuing to drop lower. We have a 20-day sell-side liquidity pool down here, right? If you use the IPTA data range idea, it's not mandatory, obviously, doesn't make or break you. But we do see that a very logical low and a PD array below us, if this is going to, if it's going to reject price, right, say it doesn't attempt to get back above these areas, we have a very logical level for short term, near term. Then we have longer term, right? And then we have really long term, which is all the way down here. That's way far, so it's not it's not of interest at the moment. This 20-day one is, though, because if we do get a retracement of some kind that ends up continuing to tank, this may set up external range liquidity raid to internal range, which then delivers to then try to target that as a reasonable level of liquidity. Okay, so yeah, we're going to keep that in mind. But yeah, if this continues to drop and the yields continue to rally, that promotes bullish DXY in some capacity, and favors indices and foreign currencies turning around and starting to seek sell side. We still see that there's a cracking correlation. Overall correlation has been a bit skewed because, like I've mentioned for the last 2 weeks, when we move into a rollover from one quarter to the next, generally the week before, week of, and week after ends up being a harder condition to trade. Right? A lot of times that's moments in price where you'll end up seeing cracks in correlation and just consolidation and more difficult conditions. And you can confirm that idea and the validity behind that statement by looking at what the indices have done the last 3 weeks. This week, last week, and the week before that. It's just, it declined, hit a particular level, and then it ended up stalling out, right? If we go to the daily chart, right? It declined here from 2 weeks ago, right? Price then consolidated, and then now this week, I mean, it's a pretty large range. Small ranges do lead to large ranges, but for the most part, the correlation issue and just the overall turn has came as a result of the S&T and the rollover after we consolidated for the week of the rollover period, right? So yeah, I just want to remind you guys too, if you get value from the content I provide here and you enjoy the things that we talk about and have gotten value, definitely like the video, subscribe, leave your thoughts in the comments, and if you have any friends that you think can enjoy hanging out with us, definitely let them know. I like word of mouth versus just, a bunch of randoms. That's okay though, right? Everybody's welcome, but having a tight-knit community I've seen comes from, people that kind of know each other, so that would be greatly, greatly appreciated, right? So yeah, so that's our assumption for the bonds and yields. With that being said, we're gonna see if that continues. If that continues, right, downside bonds, upside yields, that's gonna send reverberations through the currencies and the indexes, sending the currencies potentially lower, and then the indices also potentially continuing to drop lower. All right. As of right now, clearly, things, at least for the currencies, they look pretty insane. Right? It's just kind of whipsaw. It has declined going into today, which is Tuesday, set a low, and now it's kind of rejected away from that. We also have SMT at a higher time frame PD array. Like I mentioned, opposing PD arrays. In this case, it's in line with the upside delivery for the higher time frame on the currencies, right? But it's hit a PD array, set SMT at that PD array specifically, and now has given a pretty strong response away from it to back in line with the buy side delivery. We'll see if that wants to continue. I'll tell you one thing: if we blow this low out, my target ends up being the weekly fair value gap below this low. This is also a previous week's low. So we took previous week's high here last week, and then it declined off of that opposing PD array. External range ended up seeking internal range. I don't really like the fact that we took stops here, then we instantaneously almost took stops there at a time where things could end up continuing to drop given the bonds and the weakness we see or interest in the downside related to that market. Nothing has overall changed dramatically in terms of the narrative. Now, there can be an argument for things potentially adjusting for the quarter if we see this low get violated and the order block ends up failing. But then again, we would also have to wait. If we go to the weekly chart, we'd have to wait and see the behavior that comes as a result of that if we do get down to this weekly fair value gap. But for now, right, we also have this wick, okay? So we're going to want to keep tabs on what that wick response is going to be. Notice how the wick to the left here on this weekly chart, the midpoint acted as a pretty strong rejection point. And, we took external range liquidity here, and then that resulted in price wanting to seek internal range liquidity, right? We can see that the fair value gap on that weekly chart internally has not been taken yet or attempted, but we do see that this daily time frame has hit a bullish daily order block. So I'd like to say that, if we take this high out from the previous day, if it just displaces above that, then we'll probably have unfinished business at these highs. But obviously we'll continue to see what the delivery looks like throughout the remainder of the day. But for now, it just seems as though they have set a low. They have S&T at the lows at a higher time frame PD array. Generally, when you see S&T on the higher time frame levels, and prices, still one-sided for the most part, in this case bullish, a lot of times S&T will confirm or validate or help you confirm or validate whether a particular level in price, that level being this daily order block, whether it's going to hold or not. So we're going to see what happens in terms of that. We could see also that going into this new quarter, like I mentioned on the indices, how they've been stagnant for the last 3 weeks. the week before, week of, and week after the rollover period, that has instigated a retracement, and then also we could see it's in a consolidation from the previous 2 weeks, and we're kind of going back inside that range here for the week that we're currently in, which is the week after the rollover period. Again, those moments in price can lead to more difficult conditions, less clarity. So as a result of that understanding, we drop our risk, right? Because we analyze the situation, and knowing that that is potentially going to be the case, and how it generally is the case, where harder conditions take place after the rollover period, the week before, week of, week after, we take that and we drop our risk as a result. Not every day is a day, or not every week is a day, or a week that we keep normal risk, right? We have to be able to have situational awareness, and part of that comes from understanding things like what I just mentioned in terms of the rollover, certain times of the year, right? SMT wise, that can also be a factor in how you navigate the risk environment. And then of course, you want to have plans for those moments as well. But yeah, so for the most part, at this current moment, we still see that price is respecting bullish ideas for the currencies. We have the bonds looking like, there may be some type of interest to see price go lower. We do see that there's SMT there, so we'll see if that wants to hold. The bonds are also, as you can see, in a consolidation, right? So we need to see price bust out of that, similar to what it did here, but we need to see if that's going to maintain or not in order for us to use this as a asset in our analysis. Again, we do see that the yields have punched through the high here. We'll see if that wants to continue, because if that's the case, we'll see DXY have interest in going higher soon, and be more protracted to the buy side. And then as a result, of course, that should, if everything is going to become symmetrical, that should push the indices and the currencies back to the downside. Right, so we fulfilled a higher time frame level here. It's Tuesday, right? Tuesdays and Wednesdays generally are the times where price will set the high or low of the week, depending on what the narrative is. In this case, we're in a downtrend that seems as though it wants to just basically retrace. DXY has also retraced, but it's, we'll see if it wants to continue to press lower. If that is the case and it targets the lows, we have the wick here. Whoops, let me move that. You probably can't see it. If that is the case for the DXY, we do start to confirm. Maybe price wants to dig deeper into this range here on this candle. This turns into a bearish order block if we can get below it. We also have this wick if it does want to target sell side. If we can confirm that as we go into the open, we can use the quadrants in that wick as targets. And then, of course, the low, and then the quadrants inside this monthly fair value gap. All right. But yeah, before we go to the indices, let's double back real quick and make sure we didn't miss anything on the DXY. So again, we have this weekly fair value gap, and it seems as though it's taken previous week's high, and now it's giving somewhat of a delivery back into that previous week's range. So, and then of course we have those levels above I mentioned earlier. So if we go to the daily chart, we can see there's relative equal lows. We have this daily bullish order block. It's a 2-day bullish order block. So I want to see how price behaves around that. We also have this daily volume imbalance here as well. And then the new week opening gap from previous week. Okay, so, wait, was that this week? No, it was previous week. So yeah, if we stay above this level and we can see the yields continue tearing to the buy side, then that will end up confirming DXY wanting to maybe have an interest to go higher. For now, nothing's changed. So unless something changes, we're not going to assume that the overall narrative, which is a downtrend so far, is going to change, right? Things have to change. What are those things? 3 PD arrays to the downside in this case, right? So we haven't had 3 PD arrays completely violated to the upside, right? especially if we're looking at this portion of the market, the weekly chart. It just looks like it's a healthy retracement, right? Purged out sell side, and now prices look to retrace. So the behavior we see moving forward from this weekly fair value gap is going to determine whether things are going to, turn around and go higher or favor shorts. Because nothing's changed, we stick to our narrative, which is, DXY is still favoring shorts. We're going to observe what the responsiveness is going to be from this daily volume imbalance, new week opening gap as well, and then how this 2-day order block is going to either hold price or just get slid through like butter, right? And if that's the case, then obviously, we'll see a deeper continued buy side delivery potentially in the indices as well. But yeah, we'll see what takes place in that regard. We can make the argument that 3 PD arrays have been violated to the upside, and now bullish PD arrays are being respected in the indices. But we've hit a level where we're going to have to observe what the response is going to be. That level is the volume imbalance here. It's a weekly volume imbalance. My bad. Let me mark that properly. So yeah, we got this weekly volume imbalance, and then we have the weekly fair value gap. Right, so because there's no news currently, right, of course we get on like an hour before the open. When there's news during the pre-market open time, that being 5:30 Pacific Standard Time or 8:30 Eastern, that's the bond market open. That's why that point in time is important. But if there's no news, generally it's not really going to be too interesting. And there's a high likelihood that we get caught in the manipulation portion of the morning delivery within the daily range. That's why, if you take trades before the 6:30 open or 9:30 Eastern time open for New York, if you take trades and you get stopped out, but then price later in the session goes in your direction after the open, that's just showing you evidence that you're entering and trading within the manipulation portion. That's why a lot of times the rules where you force yourself to not take a trade before the open occurs, a lot of times that rule solves the problem with getting stopped out before the market moves in your direction, assuming obviously you generally get the overall draw on liquidity correct, but just get stopped out too early. A lot of times it comes from a timing discrepancy, not a model or entry discrepancy. Sometimes things overlap, obviously, but for the most part, that's generally the main issue when that happens. All right, so yeah. That being said, I hope the DXY analysis makes sense so far in the bonds and yields. And now we will get more deep in terms of the indices. Out of the 3 indices, you guys, which one is your primary asset? Do you guys like the NQ more, or do you like the S&P more, or do you trade the Dow? Let me know in the chat. Good morning, Ski. We got a little bit more people than normal, so good morning everybody that has hopped on a little late. NQ, all right, NQ. Yeah, most people like the NQ more because it's faster. But then again, right, I started with Forex when I first started, got my first 2 funded accounts, and then I moved on to the S&P because it was a little slower, and I was trying to get a feel for what the hell's going on and how these markets differ from the overall Forex markets. But then obviously, as I got better, as I got more trust in myself, more disciplined and more organized, more accurate, I ended up moving to the NQ. I think that's probably the best way to view things as well. because if you think about it like this, if you first start driving, right? Normally, people get a beat up, rundown car for their first car because you never know, you're going to potentially mess it up. But then later, as they get better, maybe more financially stable or whatever, but better at driving, then they can think about having a faster car. Well, it's the same thing with your assets when you're picking which one you should start with when it comes to the indices. The Nasdaq is like a Ferrari. The S&P is like a normal Honda, right? And you got to be very cautious because the risk is a little bit different. It's you need to be more accurate. At least, that's my perspective if you're going to trade the Nasdaq or go headfirst into it. Or obviously your risk has to be very well maintained because yes, it's faster. That means, larger moves can take place quicker. But that can also mean that, Nasdaq is more manipulative too. Like the wicks are larger. That's just a characteristic it has versus the S&P. But that just, it's just something you have to consider when you're trying to navigate or learn, right? And decide which one you're trying to really engage in. Eventually, right, everybody that likes the indices for the most part, at least dabbles in the Nasdaq. It's really fun. It's exhilarating, really, because you could get the minimums in like 5 minutes, right, or less. Sometimes that same move will take a lot longer in the S&P. So yeah. But yeah, and if you do want to just stick with the Nasdaq, there's nothing wrong with that, obviously. You just have to remember that Nasdaq is a lot more volatile. Opportunities higher, but you can also, if your plan's not in order, you can also be opening yourself up to a little bit more risk than you're probably willing to encounter. All right, so immediately I noticed that there's this SMT here, and obviously that has led to price punching a little bit deeper into the overall volume imbalance. So yeah, it's pretty interesting to me. So we see this daily time frame view, right? We see that it's punched into the weekly volume imbalance and weekly fair value gap. So, I mean, you could technically, right, because when you have a volume imbalance with the fair value gap, you technically just use the volume imbalance and the fair value gap range as your point of interest overall, right? So we pretty much have delivered into those levels. So again, we've met a PD array that could be responsive back to the downside. If the bonds are going to continue to drop, again, that supports the foreign currencies turning around and seeking some sell side. And then it also could have an impact on the indices. So far, though, things are not fully in sync. So when things are not in sync, obviously it removes part of the aspects that we use or tools that we use in terms of gauging or having confidence and building trust behind a particular idea and overall draw on liquidity. Obviously, it doesn't mean you don't trade, right? It's up to you, though. You could just only trade times when the market's symmetrical. But then again, you'll leave money on the table. You'll leave opportunity on the table. And it's kind of unnecessary, right? But if you're reckless and overtrading and doing things like that, it's worth considering because, conditions can be a little more difficult. But because we've hit this level, I wouldn't be surprised if we do look to want to retrace a bit. If we go to the 8-hour, we can see there's a fair value gap in here. We could see this low here on this candle. I'm assuming that is London's low. All right, we do have a new week opening gap down here that hasn't even been attempted at all. It's just basically responded pretty aggressively away from the 2-day bullish order block. We can remove that. Previous week's high has been violated. Friday's low has been left intact because we essentially just ran to the buy side. So we have these consecutive down candles. We have this run into a premium array. So if we were to violate this low, this range here would be something we would have to monitor. And we would have to see price stay below this and give a nice response. And that may end up being a potential opportunity to then seek shorts again in line with the overall bond market if it is going to continue to drop. And as a result, if that is to be trusted, if this idea and framework is to be trusted, that framework being this as a retracement, reach for a premium array to just get back in line with the downside delivery. If that's going to be trusted, we also would have to see the yields continue to rally, bonds continue to drop, this area and price get respected overall, and then DXY, opposed to that, should end up being able to rally away from this volume imbalance and a 2-day bullish order block. Now, if all that stuff stays intact and proves that it's going to continue in that way, we should be able to see this as a potential high of the week, and then and maybe see it drop in line with the overall downtrend that we've been seeing. So yeah, when we're looking for short ideas and we're using the higher time frame, it's ideal for us to see price do this and go against us. There is obviously, when we think about our validation and validation principles, that being 3 PD arrays getting violated opposed to whatever the direction is at that time. In this case, the buy side has been targeted. Bullish PD arrays have been respected. I'm going to make the assumption that if this weekly fair value gap is completely violated and it just slides through it, that will fully confirm my assumption that this is now becoming a quarterly shift back to the buy side. Right? If this is the line in the sand for me overall, this is already a bit suspect, as we see swing highs get violated on the daily chart, premium arrays like this wick, this volume imbalance. I need to change that. Oh, don't know why it didn't translate. So yeah, if these levels are violated, again, my line in the sand is going to be this weekly fair value gap. Preferably, if we're going to continue to drop, and what I mentioned takes place, where we start to target sell side, and maybe set this as a potential high of the week. If that's going to take place, I want to see it react away from this, and then of course we drop down further, get a bit more surgical. We could then start to observe this as a possible bearish breaker on this 1 hour. And because we're framing things on this higher time frame, if these things take place, then that just builds a lot more trust and confidence when we drop down to those lower time frame charts, versus just trying to identify the narrative on the 1 minute. You're missing a lot of the context when you try to do that. And so yeah, I hope everything that we've talked about so far makes sense. Things don't have to be complicated, right? I mean, for the most part, I feel hopefully what I've mentioned so far is pretty self-explanatory, right? And hopefully visually appealing and easy to follow. But yeah, do you guys have any questions? We're gonna go into the open, so I want to make sure if you guys do have any questions, we can kind of get to them before the chaos unfolds. So yeah, let me know in the chat if you have any questions. Maddie said NQ is his favorite, but ES has been cleaner. Yeah, ES generally is like the sane asset in a lot of cases. ICT's mentioned that too. Each asset that you trade or observe, they have specific personalities. Okay, so the Nasdaq is like a crazy monster at times, especially for new traders. ES can still be just as volatile, but it's more forgiving, you know. Um, they're both amazing assets, but again, that's why you want to pick one, because they have different characteristics, you know. Wicks are a lot larger in Nasdaq. The manipulation a lot of times is a bit larger, but yeah, I like the crazy, you know. So you have to make that determination. But if you do plan on focusing more on NQ, and you just started trading indices, it's probably best for you to get used to the S&P first, and then maybe graduate into the Nasdaq. But yeah. Oops. Clicked on the wrong thing. But yeah, so how many of you guys have been really digging into the market maker idea that I've been mentioning the last couple of weeks, specifically on Sunday too? If you guys haven't spent a lot of time in this market maker section, definitely want to do so. There's a lot more stuff that I'm going to end up adding into that too in the near future. Yeah, and then also journaling as well. You definitely want to take the community, right, and how it's organized and the different things, different sections, the separation of categories, right? You want to make sure that your trading journal, if you use Discord, you want to make sure that, especially if you're new and you're studying things regularly, you want to make sure that you're organizing things like this. Like have a section for the different PD arrays, right? Whatever you watch, you know, wherever you get information from, make sure you have sections for different topics. And then of course, you know, I have the trading plan development section, and I've given you guys some ideas to consider when it comes to arranging your overall trading business and your plan. You want to make sections for each of these things as well. And maybe even make a PDF, you know, spend time on it. You know, prove to yourself that this is meaningful to you. You know, don't just be the person that gets on the chart, only looks for entry, and then you turn the computer off, you know, and do absolutely no studying. You know, the harder you work at things, the more organized you are. One of the biggest pieces of advice that I'm grateful that I followed, that ICT has mentioned before, is staying organized from the start. The more organized you are, the better, especially because there's so much to learn with this way of trading. You want to make sure that if you study something and you saw like a useful lesson from, you know, wherever you got it, whether it's ICT's content or anyone else's, you want to make sure that each topic has its section so you can place whatever information you need to, just in case you have to refer back to it. You know, you want to make sure that it's organized, because we're human, you know, we're not supercomputers that have like photographic memory. So sometimes we have to go over things, you know, so you want to make sure that you're allowing yourself to have that opportunity, because the worst thing you could do is learn a concept, become good at the concept, and then later on, you know, you start forgetting it a little bit, and then you can't even remember where that information's at for you to review. You know, it adds to the you know, the fact that things take so long to master. You know, so definitely consider getting more organized if you haven't from the start. But yeah, so if you guys don't got any questions, we will continue. So yeah, we'll see what this wants to do. If we go down to the 5-minute, get a feel for the overall daily range so far. So we see this is London's low. Don't really see many fair value gaps below. There's a little bit of a fair value gap available here. Mark this just in case. So yeah, I'd prefer to see price respond to the downside away from this, you know. And if it does do that and we get below this, whether you get an entry up above or not doesn't really matter, because we have this framework on the 1 hour, right? So if anything is missed in here, say we don't get the best of the best, like start of the move, that doesn't matter, right? Especially if you identify it on the 1 minute or lower. If that takes place, and you know, maybe it takes a while for you to get in line with things, and it takes a while for price to prove whatever it wants to do, you just move up in time frame, find a higher time frame framework, in this case the 1 hour, or 15 minute or whatever, and then when price starts to set that up on that higher time frame, then you can start to identify, once price delivers back into, in this case like a breaker on the 1 hour, once it does that, you could then start to zoom in and go stock some opportunities if it makes sense, you know, like if there's still time in the session, and there's like a reasonable framework you can set up. We do have a gap in here. Is that, let's see. Let's also go look for the new day opening gap idea. So we got a small new day opening gap in here too. The low right there. Where'd it go? Right there. So yeah, this may be useful later. Let's go back to before that. There's nothing there. So yeah, we got that new day opening gap. We're gonna keep that available. Very tiny, itty bitty new day opening gap. So far as well, if we go to the regular trading hours, we have regular trading hours, previous day's low. Keep that in mind as well. Then we also have, where's price at? So now we got a pretty decent sized new a regular trading hours gap available as well. So yeah, that was, it's the close of of yesterday. So that's gonna be here. Just double check. $23.69. All right, 20. Yeah, okay. So then we got London's low, like I mentioned. So yeah, again, we're not going to be interested in pushing anything ahead of the open because there's no news. News just took place though at 6. Almost forgot about that. So that took place, and price is still providing buy side delivery. Again, we have this SMT right that we can now clearly see has led to price continuing to run to the buy side. And of course, we see the DXY declining. But again, we have an idea or an assumption that, price may look to respond from here. I'd like to see if that can be confirmed, right? Because if we do get a delivery to the buy side, again, that makes me feel more inclined to seek short ideas. Of course, it could be wrong, and it could just blast off through the buy side and then have this crack and correlation continue to take place. We are pretty strongly trading deeper into the weekly objective, which was this volume imbalance and the fair value gap. Right, so we'll see if the open can either confirm further higher prices. If it does, then the target may get all the way up to even the high of this fair value gap for the day. We'll be able to adjust. If that is the case, we'll be able to get involved with something, get a piece off, headed to that direction if that is what takes place. Right, but where's weekly? All right. So yeah. See, we've got that SMT. We got this wick here too. Maybe we could use that as well. At the midpoint of that wick as a previous day's high here. So yeah, we're gonna have to see price start to commit to shorts if we're gonna have any type of short interest. And I'd of course prefer to see DXY run higher as a result of that as well, if that's going to be the case. If we do want to get behind a trustworthy delivery back to the downside, which I think there is a possibility for. That's what I'd prefer to see. We could see overnight that London has been extremely bullish going into the open. Generally, when that takes place, even if price is going to want to go higher, if it does choose to do that this morning, a retracement is most likely going to take place, a meaningful retracement. Because when London's quick, you go into the AM session prepared to see price stall out or give a strong retracement before it decides, in this case, to potentially go even deeper to the buy side. That's a rule that never changes. It's just one of those situational awareness things that ICT himself has talked about a lot. And you could see it. It's pretty impactful most of the time. So it's pretty interesting how overnight price swept out the previous PM session low, swept that out, and then obviously London set up this delivery to the buy side. And at least for right now, seems as though this SMT is still holding in price. So we'll see if that lasts. And again, if you go into the AM session and price is just on a tear, one-sided, what is everybody doing? If that's going to be what you choose to do, what are the masses doing seeing price rally like this? They're coming into the start of the open and they're going to want to buy because they think they're missing something. So it's better to wait. People's liquidity, right, or stops, if they entered down here or are in profit to the buy side, they're moving it up to the swing lows. So we want to see a raid on liquidity, even if we're going to get in line, right, and we end up not seeing or not assuming that price is going to potentially kick back with sells, even if we're going to get into buys at some point, we still want to see price sweep out some form of a discount array, right, or some swing low where people's stops could be at. You don't want to just try to catch this thing flying thinking you're missing something, because it could eventually turn going into the open, or just give a wick ahead of the open, and then maybe it ends up going. So we're not going to be in a rush. You should not be in a rush. You shouldn't feel like you're missing anything, right? It's outside of our time windows of engagement based on our rules. So you're not missing anything, so don't feel like you are. All right, so I guess we have SMT here as well. So we have it here at these lows. Then we also have it at on that 15-minute time frame. We also got SMT at the lower time frame lows too here. So we got somewhat overlapping SMT at this bullish daily order block. So yeah, we'll see if that wants to continue. You can see that a potential power 3 has worked off overnight, and now we've delivered to the buy side. But the currencies as a whole, GU and EU, they kind of, have been sideways. And again, that's to be expected. Things looking like this, it's to be expected going into the week before, week of, and week after the rollover. So yeah, we'll see if it wants to start to deliver further, or if things turn around. But yeah, till that's clear, we'll continue to be patient though. Look at the comments real quick. But yeah. So how's your guys' week been so far? Maddie, you've had a good week. All right, cool. Week's been all right, right? It's still just getting started, right? We were live yesterday. Found a decent move in the private community. I don't think you made it yesterday. I gotta post a replay too in the archive. Yeah, my week. Ski said my week's been great. Just the normal ups and downs. Yeah. That's how you got to look at it. It's not going to be a parabolic move every single day in terms of your equity curve. Things are going to sometimes be difficult. Sometimes things are not going to make sense. Sometimes it's going to be like trading in the mud. And things like I mentioned, right? Like the rollover expectation, how price behaves around those times. It helps you submit to the fact that not every day is a trading day, that you need to engage. You don't need to engage every day. You should study every day, or as much as you can, because you're putting in reps. If you don't go to the gym, you don't build muscle. Well, if you don't sit at the chart and study, how are you supposed to become a good trader, right? It all works the same. I'm teaching myself that not every day is. It's not that. It's not that not every day is a tradable day. Like, is there something you can find every day? You know, and for the most part, I could go in every single day and find a move. The question is it trustworthy? Is there enough behind the idea that we're looking to frame things around, right? Is there enough supporting ideas around that go hand in hand with my model, you know, or whatever model I'm trying to operate within that day? And again, it's especially hard when we're new, like just getting started, and you know our expectations are through the roof, you know. And it's one thing for someone to tell you the realities, but it's another thing to live the reality, because then, you know, conversations about psychology and just different things that are important, they mean a whole lot more to a more seasoned trader versus someone that's just getting started. You know, someone that's just getting started that has never even opened like a demo or hasn't even really looked into engaging yet. Psychology doesn't seem like it's important. You know, like understanding the different situational awareness perspectives, you know, they don't really mean as much as it means to like a trader that's engaged, blown their account, got stuck in harder conditions. You know, it just goes back to the experience situation. You can't transfer experience. Like a person that's traded for, you know, 5, 6, 7, 8 years can't just put the mindset they've cultivated through experience into someone's head. You can share ideas, and like hopping on and doing what you guys do, and watching and listening to some of the stuff that I do, and the things that ICT shares and that type of stuff. You can borrow experience in that case, but there's just no replacement for having the experience yourself. You know, the different experiences as a newer trader can become a whole lot more valuable by, you know, shadowing somebody that knows what they're doing or proves that they know what they're doing and is trying to teach you. But the experience factor is always going to be something that leaves like a gray area or a gap between the mentor and a student. You know, because you could learn someone's model and you could see them operating with it and doing extremely well, but then you go in and blow your account and do all these things, you know. So there's always going to be that factor. And again, it's just why there's no silver bullet, right? No one concept changes everything type thing. Concepts stacked on top of each other, plus experience, plus seeing it used properly, so then you can go use it properly. All of that stuff piles up on top of each other to you know, produce a development curve that's reasonable, you know. So yeah, I have been catching a lot of manipulations and I end up missing out on expansions. Okay, well, dealing with that problem, you want to observe, when are you taking the trade? What days are you taking the trade? Right? What is the daily range done prior to you taking that entry? You know, have you considered taking trades only in macros? You know, like if you ask yourself some of those questions, you know, a lot of times the answers will be resting right in front of you. As far as like what you should be doing, you know, if you get caught in the manipulation and price goes in your direction and you're like getting the expansions correct, then a lot of times it has to do with the timing element. Are you rushing your entry? Was your model really there? Right? Were you in a macro? Did you actually enter using the model you're trying to use? Is it before the 6:30 open? All right, so yeah, now we are going into the open. So let's pull our attention to the battlefield real quick. So remember what I said about the potential for price to want to reverse. So yeah, we'll see if the responsiveness here is going to be something meaningful. Seems as though it could be the case. And then of course we got the London's low down here. So yeah, the fireworks have begun. See, I'd prefer to see some type of short idea take place. Just continue with the interest in the downside delivery. London's low. So yeah, 6:30 is coming. Basically the open. So now wherever it ends up opening, we're going to have a regular trading hours gap down below. So we're opening up at a premium. We're reacting from a higher time frame level that could reasonably get us into a potential short idea. That's what I'd prefer to see. See, there's that fair value gap there. See how price wants to behave in here. So yeah, if we do end up targeting this London's low, right, we may be able to observe things from a market maker sell model idea. Hopefully this high can stay intact if we are going to drop, and DXY can give a response. It hasn't quite hit the level, like the daily volume imbalance on that DXY. Hasn't quite got there. But then again, we also have wicks, these large wicks that, so if you take this large wick that overlaps this one, you break both of them in half, that is ICT's implied fair value gap, right? So the range between the middle of that wick and this one, generally that can also act as a potential PD array. I think he mentioned it like a couple times before. Many people overlooked that. Yeah, let's see if that idea is going to be something useful. So if this high breaks, then price is going to potentially have some issues. Yeah, I'd prefer to see us drop if we can, right? If it's possible, right? We're not inside of a macro yet. Yeah, this may turn into an immediate rebalance, so let's just continue to monitor that, see how that behaves. Let's see, was there an SMT? So no SMT there. DXY is still potentially wanting to reach down to here. So yeah, we'll see. We will look to engage around potentially a macro. I mean, this could just deliver from here. I prefer, honestly, to see it give us a little more evidence, just because the Kraken correlation's still clearly intact. Seems as though things, there's SMT at the highs here too, so that may be useful. So we'll see if that wants to continue to hold. The regular trading hours gap is now below us. It did fill in or deliver to half of it, right? So yeah, we're now re-attempting this weekly volume imbalance. So let's see if we can get that to hold in price and maybe start to deliver us to the downside. I mean, if you want to think more high risk, you know, and push an entry, you could continue to monitor the middle portion of this. And if price breaks, you could enter here, stop goes above this candle here. And then, of course, if price breaks through this, that continues to support the idea. This here should be able to hold. This high should not be violated if it's going to go in this particular time that we're looking at. If this is going to be a move that does deliver, we need to see this high hold. We have a fair value gap, swing high, and then another swing high. Entry here, our 3PD array idea, using this volume imbalance as a potential reactive point. The 3PD arrays would be violated if we break through the high up here. In the context of, obviously, the potential downturn, right, and price delivering away from this, reaching against the London delivery to the buy side. So we see that it immediately rebalanced this fair value gap. So let's see if it can give us a punch below this 1 hour fair value gap down here too. Right. Again, we're really close to the open. So again, the rules state that when we're around the open, generally we don't want to engage because we can get trapped, right? And it could wick us out and then run in the direction we're looking for it to run into later towards the macro. You know, so more high risk, aggressive entry, in my opinion, is inside this fair value gap. So, you know, you can do what you will with that information. And again, if it blows out this high here, the idea for this particular delivery, you know, to be the particular moment where price does push lower, that gets invalidated if this high is violated here. So yeah, just some things to keep in mind. DXY is still reaching lower. So I'd say if we take this low out, right, the wick ends up being important to me. I'd prefer to see it stay below that and also stay below this 1 hour fair value gap too, if it can. Right, and if not, obviously it is what it is. But yeah, if you engage this, right, you know, maybe you took an entry up there, offered 20. If you would have engaged lower, obviously you'd be still kind of stuck in this, you know, potential delivery. We'll see if it blows this low out. If it blows that low out, this entry targeting price going lower, obviously the minimums will have been offered as a result of this particular idea we've been identifying. So yeah, pretty beautiful if you ask me. Yet again, cha-ching. So yeah, now that we're below this low here, and just for reference, for those of you that care, to entry framework that I mentioned, right down in there. Minimums captured. Right, and it's a live account, AMP Live. For those that care, not that this is even important, what, like the money I make, the things that I do financially in the market. What matters is identifying the opportunities. Don't let you needing to see what someone's bank account looks like stop you from figuring out what truly is important. All right? Because how much money I make is not going to you can't spend my money, right? I'm definitely giving you guys things that can, you know, allow you to trust, for one, the things that you're learning and ICT concepts and the things that you apply yourself. But then it also kind of shows you that, you know, this stuff does work. And things that we talk about, you know, they are very impactful. All right, so yeah. So yeah, the next potential opportunity I would like to think about, say I missed that, I'm going to continue to observe the wick here. All right, we got these up wicks, right? That delivery from that specific area that pushed price lower here. We're going to watch how price behaves around that. Is it going to continue to respect up wicks? Is it going to continue to respect bearish order blocks? Are we going to continue to pound sell side from this point? All right, our premium array is going to continue to be respected. This here, this failure swing in here, creates a potential mitigation block idea. All right, so this down candles here, could technically use this. Down candle, do we have one we can operate with? Yeah, so this particular idea, that's also a potential model as well. Mitigation block, similar to the breaker. And it logs me out. So let's watch this. Again, we don't want to see this high get violated. If it gets violated, this idea, at least for right now, would be invalidated in terms of timing for the short. And in that case, we would just have to wait. We see this up wick here. Let's see if that can be respected. Midpoint of these consecutive down candles. Let's see if that can be respected. And I don't know what is going on with my broker. It's not letting me log in. That's always delightful. So DXY still has a little ways to go to get down to that volume imbalance. So maybe it waits a bit and just plays around in here until it fulfills that level, the daily volume imbalance, and then maybe that's the point in which you know, price will start to then run higher potentially. And then of course, if it was to just completely violate the daily volume imbalance in here, and then we break above the highs up here, we'll, you know, potentially see the indices look to, you know, maybe have a little bit more work to do when it comes to the buy side. So yeah, now it's running a bit more aggressive than I would like if a short was to be still interesting. Right, and again, I wouldn't want to see the high right there get violated, and now it's getting violated. So short ideas would be off the table for the moment. Right. And the price would have to do, the whole process would start over now. And so now price has shifted market structure to the buy side. Let's see how price behaves above this wick. We also have the mitigation block idea overall, the midpoint, what I would have liked to see if it was going to be something I would like to engage in or utilize, has been violated. So now we've got the fair value gap in here. Right, so this may turn to an inversion fair value gap, shift in market structure. We'll see if DXY wants to continue. And now if this was to fail and it was to get below this low, this then becomes a breaker. right? So then we can adjust to that idea too. But yeah, we're moving into the macro. If a move hasn't been taken, for me, I wouldn't engage anything right now. I'd be waiting. Oh, okay, you're having issues too? Yeah, it's Top Step that is giving me a problem. But this is why I like having a live account, normal live account, because I don't got to worry about the nonsense. Well, guess they don't want people getting payouts. Too many ICT traders are crushing them. There she goes. It's creating a breaker here. So the breaker idea, in my opinion, is what I would be wanting to operate within, context-wise. Right. So this breaker here, it'd need to return back into it, and if it can give us that, that is beautiful. Yeah, that is annoying how they won't let me log in. What a piece of crap. So now we got that 1 hour inversion for value gap. Midpoint of that, we got the breaker. This delivery here should act in a balanced price range fashion. So the middle portion of this breaker should be able to hold in price if it's going to be trustworthy. And again, if not, if it was to violate the high here again, these up candles then turn into a bullish breaker. And that would solidify my assumption that price is, in fact, going to want to dig deeper. But unless that takes place, I'm going to be on the side of this potentially holding as a bearish breaker, pushing us to the downside here. Again, we're not inside of the macro, so timing for me is everything. So I will, yeah, authorization error. What a clown show. Thanks, Top Step. But yeah, this right here, I like this idea, looking to potentially aim to the downside here. The indices together are supporting that. So let's see if this can deliver the meaningful move we're waiting for. Maybe start to target the sell side. So if you entered in this breaker, your stop would go above the candle for this fair value gap. This is what they like to call a unicorn. It's already taken buy stops too. London was aggressive. We should be able to stay below the midpoint of this. I don't really like the fact that we haven't had the chance to get to this volume imbalance to then deliver. So that is kind of a risk, right? It may need to get down into that. It's kind of in no man's land on the DXY. It hasn't really reached much except the idea where, you know, we have this implied fair value gap. The middle portion of this up wick that overlaps this one, and then the middle portion of this one as well. So that would then in turn look like something like this. So let's see how price wants to deliver with that in mind. Relative equal lows down here. Okay, the breaker is definitely kind of back and forth. It's not delivering exactly how we would prefer it to deliver. You know, we don't want to see things take forever when they engage a particular idea or PD array. We don't want to see a very protracted, long delivery wait time. We like to see it quickly engage and start to run. Otherwise, the longer it sits in a particular area, the more things that can go wrong. But yeah, still behind this idea, going to the downside. Still supporting the middle portion. Still hasn't blown out the fair value gap in here. Again, this should act as a balanced price range and stay below this level. That's why if it's to violate to the buy side, the balanced price range characteristics turns off. And you would then look to adjust and use that particular area as an inversion to then start to seek the opposing view. But as you could see, if you engaged this breaker here, you should now be in profit if you're paying attention and decided to take things into your own hands and trade on your demo account, right? Beautiful delivery there. Now we've got an order block here, so if it returns back into that, that's another potential positioning idea. Order block here, you can use that also as an order block. Notice how a breaker and an order block in this instance, it's an order block on one time frame, but it's a breaker on the other. Yet both of them are acting as a balanced price range, meaning the midpoints should be respected. Yeah, it looks pretty decent to me. Everything we've talked about this morning has, once again, right, at least for now, came to fruition. Multiple different positioning ideas. One was up here, like I mentioned, that first opportunity offered minimums. Now this breaker opportunity, right, we talked about we have to watch what happens if this high is violated. We got quickly right back down below. This turned to a bearish breaker. Price delivered to the midpoint of the breaker idea. Respected it, delivered from a fair value gap, offered minimums yet again, and now we are, in my opinion, pretty set to attack the London's low here and continue to the downside. DXY is also turning from the implied fair value gap, and we're delivering pretty strongly off this weekly volume imbalance back to the downside. These consecutive candles acting as an order block. As it breaks through the lows, we continue to monitor this. Midpoints are being respected. Watching the wicks, fair value gaps, order blocks, everything delivering. And it's just a work of art. And those of you that pay attention and, utilize this resource, hopefully you've been getting value. And again, if you guys get value, just a reminder, don't forget to like the video, share with your friends. And if you have any questions about some of the stuff we've been talking about or some of the things you see going on, I'd be happy to answer any of your questions. Yeah, so if we lose this high here, again, that'll turn off my interest. This is a high resistance delivery. This is not in any way low resistance. This is clearly high resistance. Deep retracements, very stuck in the mud type of delivery, but overall gravitating towards the sell side for now. So yeah, we're going to continue to be behind that until proven otherwise. But yeah, so the first idea offered the minimums, or a chance to get the minimums. The breaker idea definitely offered the minimums as well, if you chose to engage in the fair value gap, or even just a little bit below into the breaker, delivered the minimums. I don't think we're done. Nothing provides evidence that we're done. So yeah, we're also below that 1 hour fair value gap. That is very helpful. So if we keep that intact and can deliver away, just further evidence built behind us that we're going to continue to drop. Let's go look at the other indices. Okay, we're in a moment of retracement here. High resistance delivery, at least from what I see here, but between the three indices, I mean, they've all kind of been pretty high resistance, but the Nasdaq especially, it moved the least amount, and it's been the most whipsawy back and forth, and it's had the deepest retracements. We filled in this entire regular trading hours gap, so that's interesting. Again, if we lose this high, the interest for me to want to get back in line with shorts, given this framework we've been painting, pretty much falls off the table. And we're now inside the macro. So let's see what that ends up doing here. We got the bonds wicking through this low here and now giving a retracement. The yields are looking like they want to turn around a bit. Correlation, the cracks in correlation are still out in the open. And yeah, it's high resistance, what we're observing here. But clearly, the two opportunities that I mentioned from this breaker perspective and this first initial entry, right, using the mitigation block idea, both of them offered the minimums. Now, if you didn't accept the minimums and you took this condition as a trending environment and didn't take any of my advice, and you're demanding hundreds of points just because you said so, disregarding the overall condition awareness that I've been mentioning, you most likely have been stopped out now. While, you know, the ones that submit to the minimums and take that seriously were able to then capture at least the minimums, even if price was to turn around. And if you didn't take a trade and, you know, you've been sitting out, you know, we still got opportunity, right? Let's wait till 7 o'clock, see what the silver bullet will offer us. Maybe, you know, there will be more opportunity for us to maybe engage yet again to the sell side, or maybe it'll provide evidence that things have changed and it maybe wants to target buy side again. Right, so we've taken out this high I said I didn't want to see taken. So let's see the behavior after price has swept this low slightly. DXY is, you know, we'll see if DXY wants to continue to reject. We have responded off this implied fair value gap, like I mentioned. So we're going to continue to watch and see how this wants to deliver. Taking out this high, though, again, takes sells off the table for me. I'd have to see more delivery providing evidence to the sell side for me to want to look to get back in line. At this moment, we've now shifted market structure to the buy side after taking sell side, disrespecting any of the sell idea invalidation points that we had for this particular idea. So we'll see if this wants to hold. We're back above this 1 hour fair value gap I was talking about as well. And seems as though, you know, we may look to target the buy side here as well. So yeah, we'll continue to watch. But yeah, those first two opportunities that I mentioned in the moment came to fruition, offering the minimums under the context of DXY potentially giving a response to the buy side, and us potentially seeing a framework that could short the market. But then, of course, you know, we're inside this high resistance view here, and, you know, price is just not really, for the Nasdaq at least, not really wanting to give very easy opportunities. These first two were fairly simple, right? And they were hopefully easy to see, and the logic behind why those would have even been considered, hopefully that made sense to you guys. Oh, the web platform's available. Interesting. For Top Step. Let's see, is it still playing games? Oh, wow. Trade of 8 maintenance. Looks like there's a technical issue with Trade of 8. Wow. What a clown show. Again, this right here is a beautiful example, like I said, as far as why you can't solely have your goal focused on only depending on funded account companies, because something like this can take place and it will refuse to let you participate because they still have a decent amount of control, and if something happens on their end, you're screwed. But with a personal account, you're able to have more power. Yeah, so we've shifted market structure here. The correlation is still an issue. The breaker now has turned around, right? It's invalidated the whole breaker idea, so we could turn that off. And now we have this change in the state of delivery above these highs here. So unless this gets violated again, pushing back through this and starts to march, I'd say, and get below the 1 hour fair value gap, there's a likelihood for us to maybe want to blow these highs out. And then, of course, whatever it wants to do above that, we'll have to see what takes place. We got this fair value gap here. It's also acting as an inversion. All right, so now, so there's nothing for me personally at this moment that I'd be excited to say, yeah, let's get in. It could use this as a shift in market structure, inversion, fair value gap to run higher. But just given how I've seen price deliver this morning, it's a bit suspect. We're in high resistance, so it can just bang around in here and stop everybody out. I'd be willing to miss this opportunity to the highs. Right? We pointed out 2 opportunities, so given that, and I engaged on one, given the fact that that's what's taking place, I'm okay with missing this if it wants to go up there. Definitely something to study and consider, though, given all the ideas that we just talked about have been disrespected. Right, the invalidation levels for this idea at that moment to go lower clearly turned off. So this is what we're going to monitor now. Dang, that was a large wick. Oh yeah, that was news, huh? Yeah. All right, so yeah, we'll see what happens here. So these consecutive down candles, this shift in market structure, I'm assuming that left an order block behind. I guess not. Yeah, somewhat. DXY is having a strong response, so that continues to support this. So this, these up candles, did I mention this? Did I spot this earlier? I don't think I did. Did I? No. So yeah, this consecutive up candles here, right? We should drag that out as a breaker, right? And if it does choose to stay above that, this response pushing price back to the buy side if DXY shorts here starts to become a lot more sensible. But again, higher time frame narrative is still bearish. The larger view has not changed. So that's why we are not going to get fully behind price having some crazy expansion to the buy side. Right? Short ideas, until proven otherwise on that higher time frame, are still of interest to me, more than trying to assume that things have overall changed. And if this does end up going lower, it just again shows validity behind how we navigate price and how we decide to either adjust or stick to a particular narrative and the reasons behind that process. So yeah, I'm still gonna stick behind wanting to see this get down below to the sell side, because higher time frame wise, we're still bearish. I don't like how we just left these equal highs there, just like nonchalantly, just like, yeah, let's just leave the highs. I don't think I like that. But then again, we'll see what happens. Nothing in here promotes the idea of me throwing an entry or real money behind. So we're going to have to wait. So we looked at this inversion. If that would have held, again, I would have been supportive of potentially adjusting short term to then go higher. But yeah, that hasn't fully been committed. I can tell you one thing: if this low violates, or if this delivery here violates this low, we now have another potential breaker area. We're kind of squished between two breaker ideas inside of a consolidation, right? This bullish breaker here from these up candles, and then of course this potential breaker that's forming. I'm gonna stick to the side of, you know, the opposing view of DXY and the higher time frame narrative in this case, which is still downside because nothing's changed. We just delivered to a premium array. So if we violate this low, I'm supportive yet again of trying to frame out something that can keep us moving lower, then eventually targeting the London's low. And then whatever happens beyond that, honestly, I could care less. Because just this alone, this little range in here, we could find something to engage. If, of course, these things come to fruition. I think given what we see so far, if this continues, we will end up seeing this move continue to press lower. But yeah, we will see what the vibes are. Lots of behavior inside this regular trading hours gap. It's just completely trading both sides, right? Banging back and forth in here. Nobody has been allowed to be profitable. We set relative equal lows here too. That's what will be taken before London's low ends up getting violated, if it gets violated. Yeah, I can tell you this. If we get back outside the upper portion of this regular trading hours gap, that may end up showing to be the catalyst for price to get above these obvious equal highs up here. But if we stay below it and it can break down below this low and DXY can continue to rally and maybe the currencies can continue to fall, we have a very strong justification for why price should target the lows here. It seems as though that could be the case. Very perfect response off that implied fair value gap I pointed out. Obviously you don't have to use every PD array, but it's helpful to understand how to identify majority of them, if not all of them, because this right here would be a whole lot less meaningful of a delivery if we didn't identify the implied fair value gap. That implied fair value gap is ahead of the volume imbalance, so that could potentially be the reason why it didn't choose to come down to the volume imbalance. If we do in fact see price continue to the buy side in a more protracted way, and it just refuses to take the lows out or even return to this, that would be the reason why. So yeah, very strong consolidated vibes, so don't be in a rush. Just flipping through, making sure we didn't miss anything. Now this too, right? If we were to violate this low, this down candle could act as a bearish breaker candle. There's a low, high, lower low. If it violates that, then that would be a catalyst to get us down to these lows again. This fair value gap, so on and so forth. All right, we're just kind of stuck inside this range still, dancing in between these levels. If we go to the Nasdaq, clearly looking at price, if we didn't engage one of those two earlier entries, you should be thanking yourself for holding off if you were trying to push any other position beyond the two that I pointed out. Because nobody's being allowed here to get a protracted move. And we anticipated potentially harder conditions. So we're not disappointed in the fact that, if we didn't take a trade, you shouldn't feel disappointed that you didn't, because look at what happened. And if you took losses, you'd be sitting there, oh damn, look at what happened. I should have just not taken a trade, you know. It's better to just think, oh, okay, either I'm going to miss this trade because it's potentially going to be crazy, so I'm going to demand more, or I'll just, you know, potentially take the 1 or 2 engagements I took, even if it's like $2 made, and just leave it there. Aside, you know, versus trying to force things and then come back and see things like, oh, okay, it was a pretty disgusting environment, and then have to regret it later. I want to try to minimize the amount of times you throw good money after bad. And this is a beautiful example of that. So yeah, this as a potential bearish breaker has now been shut off. So now it's just a big mess in there. So after a very strong London session, like I mentioned, it has a likelihood of pulling deeply into it or having a shitty start to the AM session. PM session may end up delivering something meaningful. I may stick around till PM session, so we may have that type of engagement today. May take a break and then possibly come back after lunch, after the lunch hour, do another live. Oh man, my freaking knee is killing me. I don't know what the hell I did to my knee. Just like sitting here. But yeah, so we're now above that regular trading hours gap. I said that if we get above that, there's a potential likelihood for us to maybe want to purge out these highs. That could potentially be the reason why it does so. And we also can layer this 1 hour fair value gap. We could see how, you know, price wants to hold inside that. Looking at price right now, you should not be telling yourself there's anything to take a trade on. If you trade the YouTube model, market maker models, any other model, unless you want to just wing it and try to take this as an inversion fair value gap delivery to the buy side. I mean, it is in a macro, so, you know, maybe that is something that takes place. This is just not within the parameters of my model. It may be the exact point where price does deliver, because we did anticipate this as a scenario to deliver away from and, you know, start the targeting of these highs. And I mean, if you would have taken that, clearly, you know, there would have been some type of validity to it, right? At least to hit the minimums, right? If you wanted to throw a riskier entry in there, you know, it's not my trade, right? It's not something that fits me. Even if it does play out, I want to see the things I like operate. And if they're not there, I don't care, right? We're behind this, right? We are anticipating this as a possible area that could send price higher. And if it does so, you know, it just shows that we can anticipate things outside of our model. Doesn't mean we should take them, right? Our understanding of how price behaves related to the relationship of PD arrays and price. I mean, it's just a good testament to that, and just the intuition. I guess you could say it's more intuition in that case. Yeah, we'll see how price wants to behave here. Again, I have nothing I'm interested in this mess, right? We already called out 2 beautiful entries, both offering, in the context of price potentially wanting to go lower, both offering shorts here at this fair value gap, here at this breaker and fair value gap. This was also possible mitigation block scenario. These down candles drag it over. That was respected for that time. But then anything after that, if you weren't chasing minimums or accepting the minimums, you would have got taken out, whether you were in a buy position or a short, unless you somehow, well, I mean, you can make the argument that maybe you use this breaker down here, took that as the bullish entry, and you know, engage that. If so, well done, you know. But as far as what I was aiming at, we caught this breaker late, right? Caught it when it was already up in here. So it was kind of off the table for me, because I was more favoring shorts because of the overall intermarket relationships and just the way things have behaved up until this point. This breaker being utilized maybe with a turtle soup, if that's your model, bravo, you know, just because I pointed these areas out, we did end up pointing this one out, but just because I pointed these out, if you would have taken this, doesn't mean you're incorrect, doesn't mean you should not like what it is that you did. If that is something you engaged in, that's beautiful. You know, it's the beauty of trading. You know, we do see it there. This being used as a potential bullish breaker is being justified as price is showing the delivery here, right? But you just have to be honest with yourself and think, was that something you could have participated in? Or is it something you participated in thinking about some of the other things that we're talking about? The 1 hour inversion fair value gap, or fair value gap at this point. The regular trading hours gap, price got above it. I said if it got above there, it would most likely set the run up to get above here. So yeah. Yeah, my main objective was these two, right? They fulfilled the minimums, which I'm satisfied with, and the price has now become stagnant. DXY is now raging higher, which goes against the indices trying to go higher. So clearly there's a crack in correlation there. That's one reason why we look at this as low probability, high resistance. Then the week before, week of, week after rollover, that's also proving to provide high resistance, right? And I mean, it's just clearly evident in the chart. And then, of course, London being so aggressive to the buy side, that promoted price having a little bit more of a shaky start to the AM session, possibly anticipating a retracement or consolidation. That also has come into play in terms of the high resistance characteristics. So all these things together create a portion of your situational awareness understanding and what to anticipate given certain circumstances. You know, these are things we go over all the time, obviously, especially with the rollover. I've talked about that ad nauseum for the last 3 weeks. And you could just see it come into fruition. So if it's not in your notes already, the week before, week of, and the week after a rollover period, meaning we go from one quarter to the next, that entire condition should be looked at as potentially presenting high resistance. And then, of course, we were also in a higher time frame consolidation on the higher time frame for the indices. Then we're also in consolidation for the bonds and yields. So those are all layers providing evidence as far as why price may seem a little more difficult to you at this current moment. So all those things should be made to or put in a list, so then you could check boxes off, right? And the more boxes you check off, the more high resistance condition you'll be in. Doesn't mean there's no opportunities. Clearly, we pointed out a couple of different scenarios, right? If you were of the thought process that price was going to buy this bullish breaker, right? Obviously, you would hopefully have been able to bag something off of. If you would have missed it, I said when price gets outside of this regular trading hours gap, gets back above this 1 hour fair value gap, if that's to take place, it's going to disregard any of the short ideas, and it'll probably set up the move that gets up to the buy side. We called that ahead of time, right? We called this drop here, offered the minimums ahead of time, this one too, ahead of time, in the moment, which you can go back and watch the replay about, right, and see the thought process related to that. Right? Pretty much every single invalidation point, every single potential idea I mentioned as a possible entry, offered minimums. Of course, the invalidations ended up getting taken out too. So if you were thinking this is a day to hold for 100 points and just disregarded things that I've mentioned today, you maybe got hurt. If you overtraded in here, you definitely got hurt, right? But yeah, the positioning framework for shorts, hopefully that was clear. And then obviously the things that would show us that buys may be kicking into effect, that being the inversion for value gap here, or just the FVG getting traded through, and the regular trading hours gap getting price above it. That also set up the buy position school of thought as well. So you could see we're able to navigate both sides, and you got to make your determinant. And then we also talked about this breaker here a little bit late, but that also supports the potential for price to want to go higher. That's casting aside the correlation situation that we've been talking about that's had some trouble the last 3 weeks, primarily because of the rollover, also because of geopolitics, the crazy things happening with tariffs and adjustments in financial policy with the U.S. and stuff like that. So that's been our conditions overall. And we've been ahead of all of it, mentioning it ad nauseum. We've been prepared and in the mindset of navigating high resistance. Yet every time we've hopped on a call, we've been able to find something profitable. I've had one losing trade this month, which I took in my private community. I believe it was on Friday. Let me go double check. I believe it was on Friday. Yeah. Yeah, it was on Friday. But yeah, I mean, sounds pretty good to me, right? Those of you that spend all this time with me, I mean, hopefully you're starting to see, your time is well spent here. But yeah, I'm curious, did any of you guys end up engaging the buy position? Like once it got outside of the levels I mentioned, was that something you thought about? Or maybe one of you guys seen this breaker here, right? Did you guys take anything opposed to shorts outside of the ideas I mentioned earlier? Yeah, so even to this very moment, there's nothing really to be interested in. I'm not too excited. I mean, even this delivery to the buy side, you see it's still delivering in a high resistance, stuck in the mud type of behavior. I love when situations like this take place, like when we go live and conditions like this take place, because there's so much more to learn from the way that I navigate this type of environment and the things I talk about and the mindset I share versus being in a always trending environment, because it's not always trending. These types of days will take place, and these are the types of conditions that you will blow your account. These are the types of times in the market where you'll start to doubt yourself. You'll start to think, oh, I don't know what's happening. I've made an argument for both schools of thought, right? I've talked about ways to think about either direction. And, we've been able to come up with an idea that could have been profitable for both. I personally engaged the shorts. We came in favoring downside delivery, anticipating this higher time frame volume imbalance to deliver to the downside. That idea, bias-wise, took place, offered a couple ideas. Then once that was turned off by our invalidation levels I pointed out, right, once that was turned off, I said a scenario that could reasonably be considered to take a buy. So whichever school of thought you resonated with more, right, you want to make sure you're leaning into that. But, it's amazing to have these types of scenarios take place when we're live, because these are the times where I used to blow my accounts. The forcing things in these types of scenarios, I mean, it's where most of the pain has come from. That and trading before the open, right? Or red news days and having no rules that help mitigate some of the bad experiences. These are the times where I personally learn the most, and I hope today and any times like this in the future that come, hopefully you also can start to really develop your mindset when the times are a little bit more difficult. You could take some of the things I've mentioned to heart. It's the same situation. Every time we have a high resistance condition, most of the time they're anticipatable. You can anticipate them. But things like the rollover times and end of the month, start of the month, FOMC, NFP, like prior to that, like the same day or day before, those take place. Holidays, day before, day of, and day after holidays. When you look at the higher time frame charts on a daily or weekly, and the candles are overlapping, you can expect high resistance. When you see the bonds and yields consolidating, a lot of times that's going to lead to high resistance in the indices and currencies and DXY. What else? After a large range expansion that hits a PD array, overall, especially if it comes on at a particular time, like a Thursday or Friday that has a news event coming out, a lot of times that'll also present high resistance. You got to think large ranges lead to small ranges lead to large ranges. So that in itself is a good tool to use, or a good concept to think about when it comes to anticipating when price is going to stop trending and be in a high resistance environment. So that whole list right there, you maybe want to rewind what I just mentioned. Those are many, many scenarios where price gets put in a harder to trade type of environment. And then, of course, if you're on the higher time frame and you map out premium and discount for whatever range you're trading within, if price on the higher time frame is resting at a equilibrium point on the higher time frames, a lot of times that's also going to promote consolidation. What does consolidation promote? A lot of times high resistance. If we're bouncing in between multiple new week opening gaps and it can't break through any of those, right? And it's just bouncing from one to the next like ping pong, that's high resistance, consolidation, and a reason why price is consolidating. And if you layer all these things that I just mentioned together, and if you can find multiples of those taking place, that you can start to gauge just how high resistance something is, whether it's going to be a short-term thing or if it's going to be more long-term, protracted, So that list has come from the entire experience I've built through trading the last 5, almost 6 years. So that's all experience, stuff that you'd have to learn on your own and piece that together like I did, hours and hours and hours of trying to figure out and observe, when does price put me in a harder to trade condition? How can I identify it? Well, that little list I just gave you a second ago, you can start putting all that stuff together. When there's cracks in correlation also, a lot of times that'll also lead to, one of those other parts to that list overlapping with one another with a crack in correlation. A lot of times, that starts to show you that we're in high resistance, right? Or price is probably not interested in moving. And then of course you adjust your risk as a result of that. You don't just keep the same risk all the time. You have to know how to observe and understand what's taking place. What kind of condition are we in? Because depending on the answer you give for that will or should directly influence what your risk profile is going to be for that day. And if you want to trade long term and be professional and you don't incorporate that, the market's going to force you to face that, right? Because that's a mistake. Not every day is a full margin risk. Never day is a full margin risk, actually. You should always be very nimble, and learn how to pyramid. So then you could start with something small and make it big. Learn how to anticipate larger moves so you can learn to trust larger moves. And then when you're able to anticipate the high resistance situations, you're able to then adjust your risk to what it should be for protection. Because in this is the type of environment that is very interested in stealing your money, right? And if you allow it to take place by overtrading, over leveraging, or forcing your interest in a expansion on the market, like if you force that, you're going to learn quickly. And some never learn because they refuse to think that not every day is a trading day. that we can push our edge. And the market quickly shows them the door. And they end up in the trading graveyard. And that is by all means something I am trying to help you guys never have to become victim to. We're all going to make mistakes, but if you just never overtrade and over leverage, and you're able to identify the conditions somewhat reasonably based on the list I just gave you, so you can know when things are going to potentially be high resistance, like 80% of your problems will probably be removed, just if you think about it. A lot of times losses come from high resistance environments. A lot of times we blow our accounts in times like this. A lot of times a small paper cut can turn into a gashing wound that blows your account. That's over trading. And things like confidence, right? How to build your confidence further and stuff like that, like the other problems outside of, what I just mentioned. Obviously, there's ways to mitigate those as well. But for the most part, most of your problems will be solved if you just don't overtrade, don't over leverage, and you can identify what kind of conditions we're in. Most of your problems will be solved. Not all, but most. Most of the avoidable issues. See, so this idea to get above these equal highs here, we mentioned that they probably won't want to leave that. If it is going to get above the 1 hour fair value gap and the regular trading hours gap, it would have most likely blown that out. As you can see, eventually it got up there, right? But it's been high resistance as a result of us trying to get up there. Right, so yeah, we'll see what price has to offer around the 750 macro. I think that's where my interest is going to be at now. I have no interest in trying to rush into something right now. You've seen the patience we've been having, where our focus has been, how we should be thinking about things today, how we should be operating, what we should be doing, so on and so forth. So I hope you guys have been getting value from the perspectives I've been sharing. I hope this was encouraging to see, right? You got to witness a time when my expectation overall, that being price declining as we went to the open, you got to see that being turned off. You got to see how I would have adjusted, what would have showed me a possibility or a possible option to engage to then position for a targeting of these equal highs. So you got to see that. You got to see the regular trading hours gap and inversion fair value gap turn on the interest for possible buy side delivery. And of course, this whole entire day in the last 3 weeks at this point have also shown you how I behave in high resistance environments. So yeah, now that we're above these highs here, we'll continue to watch what's going to happen as a result of that. We could still see things are, still a bit shaky when it comes to the bonds and yields relationship with the currencies and the DXY. There is a wick taking place, right? We purged out the buy side, and we definitely got above this weekly fair value gap. Again, if we stay above those areas and it starts to continue to march, we've now set equal highs here. These are relative equal highs on the weekly time frame. This is a weekly candle, weekly high, weekly candle, weekly high. We've gotten outside of this fair value gap, this swing high here, and we've blown past the wick midpoint here that should have acted, at least for me, as a rejection point to continue dropping if that was going to be the case still. But now we're starting to build the possibility for price to now want to maybe target the wick, right? The quadrants in the wick. Maybe these equal highs like I mentioned. And then maybe even eventually get us all the way up into here. That would promote strong dollar, which could be the case, right? We could see dollar start to explode to the buy side. But that would just continue to support the idea that the sell side delivery in the indices should in fact kick in. And if that does take place, again, it's going to be providing reasons and showing the importance of rooting yourself to the higher time frame. Another thing to mention, the COT, I think I did an analysis on COT on YouTube like a week ago. That shows supportiveness of short positions, right? So lots of things are still supporting the fact that the indices are probably still going to continue to drop, right? So we'll see if that ends up kicking back in line. Right now, it's not really providing evidence for that. We are in a high resistance environment. There's no reason to force things. We were able to identify a buy position, which I didn't take, and 2 short positions, which I ended up taking one of them, securing the minimums. So you've had 3 opportunities to make a decision, you know, and if you feel like none of them had you feeling comfortable enough, that's a profitable position you took. And that's something to be proud of, because you were able to say, you know what, personally, this doesn't align with what I want to see in price. And if you had the mental toughness to say, I'm going to sit out and not feel bad about it, or even if you sat out but you somewhat feel bad, but hopefully you start to realize that there's nothing to feel bad about. Even if you had those things take place, that's still a win. It's a good way to navigate this particular environment and the overall conditions, which is high resistance. We're in a rollover period. Okay, we're still price is still adjusting to what's taking place. So it's setting the stage for whatever the hell it's going to end up doing in the coming weeks. Right? So yeah, there's nothing to be upset about if you didn't participate. But hopefully, whether you participated or not, hopefully everything has made sense today, and hopefully you guys have been getting value. And if you have questions or concerns or want to mention anything, definitely feel free to do so in the chat. I like hearing from you guys, getting feedback, especially if you got questions. I'd rather you hit me with questions, even if you feel like they're stupid questions, which there are no stupid questions, versus you just sitting there listening to what's happening, not quite absorbing it because you're confused or something. I'd much rather you shoot whatever questions you have, so then they can be addressed and you can get more out of these videos. So yeah, just let me know in the chat if you have any questions. Yeah, we got the sun coming out now. So yeah, price is still working the buy side up here. See what this is doing. Wow, this set up a pretty nice scenario here. If you were live with me on Sunday, we talked about market maker buy and sell models. If that conversation made sense to you, this right here should look exciting to you. Right? This one too over here. You should be feeling excited because this should be popping off the chart, hopefully. Right? This is a 1-minute market maker buy model. Right? We got S&P at the highs here too, so let's see what that does. Ski Mark said last week on Tuesday, you said something about gaps in the market. My question is, when do you know that a gap is fully traded? Well, fully traded meaning like balanced, right? I'm assuming that's what you're trying to allude to. See, if you have a fair value gap in here, I'd say it's a bullish fair value gap, right? It's going to be a lot simpler answer than you may be expecting or may have expected. Right, so if price does something like this, right, and then where is the tool at? All right, so how do you know that a gap is fully traded? How will you know that price won't come back and use it? Well, for one, we never fully 100% know guaranteed, right? But the highest likelihood that price won't be traded back into or shouldn't be traded back to is when you can observe price creating a balanced price range through the delivery of that fair value gap. So say something like this was taking place, right? We're running higher. If price trades into that fair value gap, right? Maybe it trades to it, dances around a bit, then trades away. Or if price trades to it, through it, maybe comes back and retests it one more time and delivers away from it, this should be acting as a balanced price range, right? So if it trades both sides of it, trades back to the middle of it and trades away, or if it just trades through it and then just trades away in general, preferably I'd like to see something like this take place and then have a reason for price to want to draw, in this case, back to the downside. In those scenarios, that's how, that's what you want to see if price is going to trade away from the fair value gap after it's traded into it, and then won't come back, right? Because if price trades like a fair value gap here, similar to what it did over here on the monthly chart for the DXY, price is traded all the way through this fair value gap. So this created this large fair value gap, but then this one also layered on top of it with a single fair value gap as well. So they both buy side and sell side has traded. So that's efficient. So if price was to maybe come back into it, if this is going to act as a balanced price range, it should be able to stay away from trading too long into it one more time. It shouldn't have to if it's going to continue to draw, say, lower to this fair value gap or some other PD array below us. When price trades both sides and then trades away from it, right, it shouldn't have to come back into it. Or if it overlaps it, right, like this, and then maybe attempts one more time, but then pushes away back to the downside, there's no reason to think that price is going to trade back into that fair value gap, especially if there's a logical reason you have for price to want to seek, in this case, sell side. Right? So once price trades to, through, and then away from it, and you have a reason for price to continue away from that fair value gap, it shouldn't have to be traded back into. Another thing, too, you can consider as well, if you see a breaker take place, and there's a fair value gap above the breaker candle, or maybe there's an order block up here or something that you're trying to observe. If you see like a breaker form and price doesn't, like you observe that it doesn't want to come back into it, the reason why is because, again, that breaker and order block itself, right? This could be looked at as an order block with this movement here, or it could be a breaker on another time frame. Regardless, if that forms and maybe you see a fair value gap in here or something, you'll see that it won't trade into it, so it'll leave that available, because when that forms, it's forming a balanced price range. In the PD array matrix, if you pull up the list, here I'll pull it up real quick so I can show you. If I could find it, right? Let's see. So yeah, I'm looking at price right now on my other screen, and we are engaging buy side further. Nothing that I'm entirely excited about. So yeah, to answer this question real quick, if I could freaking find it, right? From my private community. Right, so if we see a fair value gap that's inside of like a larger time frame bearish breaker, say this is like the 1 hour or the say the 1 hour, but on the 5 minute you see a fair value gap up here, but that 1 hour breaker is clearly there, and you see price break down below, right? When price returns back into it, this is the list of PD arrays and the order in which current price itself is going to reach into one of the PD arrays. So bearish mitigation block and breaker block are generally the things that it'll seek first if it's available, right? But if there's a breaker or a mitigation block is literally, the only difference is the fact that it goes like this, right? Breaker does this, mitigation block does this. Same idea for price to want to respect it and deliver from it, right? It's the same exact idea. A lot of times a breaker will form on like the Nasdaq, and mitigation block would be for the S&P or something, right? The delivery itself is generally the same though, same principles. But say you see a breaker on the 1 hour, but on the 15-minute there's a fair value gap up here, right? Sometimes they'll overlap perfectly, and that's the unicorn, right? But say it has a fair value gap and you're wondering why it doesn't return back into it or why it leaves it open. That's because the breaker, if you look at the list, the breaker and mitigation block, if that's available and a fair value gap is available too, that's above price in terms of this example, the fair value gap is deeper on the list, so it comes later. So the first things it seeks, the first thing it's going to seek is a breaker or a mitigation block if we have even an order block and a fair value gap available that's above that breaker. It's because of this list and the order in which price seeks these PD arrays. It's because of that order in which it seeks the PD arrays that it would leave a particular PD array available if the breaker is available and a fair value gap, but the fair value gap is deep inside the breaker. Because the breaker's showing itself on the 1 hour, given the example we're talking about, that fair value gap that's above, deeper inside that breaker will be left open because of the way this list is organized. Because this list is labeled from a importance standpoint or like an order standpoint, right? Like this is the order in which the algorithm seeks the PD arrays, right? These are the first ones, second one, third one, fourth one, fifth one, sixth one, so on and so forth, right? So if multiples of these are available in a particular price delivery, you want to look at this as like this is the first and second one that it'll look for. If price is like right here, for example, and if there's anything above that, they will most likely get left alone and the breaker will deliver. Or say there's a fair value gap and an order block. A lot of times those two are paired together. But say there's a fair value gap and an order block together, or in close proximity, but the order block is higher than the fair value gap. A lot of times the fair value gap will be hit, and then that order block that's above, like way above it, it'll be left alone because of the order that this is showing us, right? Does that make sense? So not only did I just cover the delivery inside of a fair value gap and when you can reasonably anticipate that it has been used and you don't need to worry about it much more. It may be used later, but for that current moment, if it trades to, through, and away from it, say we're bearish, right? Say it trades to, through it, and then pushes away to the downside. Most likely, if that took place, it's not going to have to come back unless it's going to start attacking buy side. And you flip this logic the other way, and it works in a very similar fashion. Right? So yeah, I hope that answered your question, and some of the extra advice I gave there too in terms of identification. It looks like I'll have to. Okay. But yeah, so I hope that made sense. I hope that was clear enough. YouTube is not receiving enough info. Okay. Screw you, YouTube. Hopefully y'all can still hear me. But yeah, so we're moving into the 750 macro here. Price still is on a tear to the buy side. So I guess the starting drop and the run above those equal highs clearly was the more profitable dynamic price movement. But we've shown opportunities for both sides. We've explained exactly what led to both opinions. We started the day off with the assumption that maybe we'll set a high of the week, to then respond away back to the downside in terms of the overall narrative. That did not fully come into fruition. It did offer two ideas in that context, but then we talked about the adjustment and what would have turned our attention to the buy side, which was the violation of that 1 hour fair value gap and the regular trading hours gap. We also pointed out another reason as far as what price would potentially use if it was to push higher. We also had an SMT, right? That other reason was this breaker here. And once we got above these levels up here, price ended up delivering, and we can see that if this would have been violated, it would have created a breaker. It was not violated, and price just continued to march higher. We're now digging deeper using the volume imbalance we traded to as support, but we're digging deeper into the weekly fair value gap that now the quadrants inside that weekly fair value gap become possible targets. So what I'm understanding is if price meets the breaker first, it might not go to the fair. Yeah, exactly. If we're bearish and there's a bearish breaker, but there's a bearish fair value gap that's above us, the breaker comes first on that list of delivery, right? So it's like the breaker and the mitigation block is the first view. If it's and mind you, it has to do with what's available. Not every single PD array is going to be available at every moment, right? So it just depends, like what's available. And then whatever, say you have like a breaker, an order block, and a fair value gap. The breaker should come first. If price trades to the breaker, it's most likely going to leave the order block and fair value gap that's above price. Because the order in which price seeks these PD arrays is listed here, right? It goes first, second, third, fourth, fifth, sixth, seventh option. So if a breaker is present, generally that's going to be the PD array that price delivers from, because it's the first one. And at that time, because of the order that price seeks these PD arrays, the breaker would be the first option, and generally it delivers from the breaker if it's available, because it's the first in the order of delivery. That's the PD array hierarchy, which a lot of people overlook. A lot of people don't get that, right? So it's just one of those little things that people don't pick up on. A lot of people quit before they can get into the depths of even this topic with PD array identification. That's something that I talk about a lot with my private students. But yeah, I hope that made sense. Right? Very important. So next time you have an opportunity to trade and you see a breaker and an order block and a fair value gap or any others on the list, you'll be able to think about things like this. Okay, if a breaker or a mitigation block are there, if I'm looking for a fair value gap and I don't trade breakers, then I'm probably going to miss that move. But you'll know why you missed the move, because the breaker delivered instead of the fair value gap, because the breaker comes first when it's available with a fair value gap and an order block, so on and so forth. But if there's no breaker and there's a fair value gap and an order block, sometimes they're together. But if there's a fair value gap and an order block that are far separated, right? So the fair value gap's above, but the breaker's below, or the fair value gap's below, but the order block's above. If price trades into that fair value gap, a lot of times it's going to use the fair value gap because it comes first before the order block, right? So, and again, it has to do with what's available. Not all these things are available at every time. It just matters what's available. All right. So yeah, it's a little bit of POI identification, tactics, and fundamentals. Most people don't know. But yeah, it's in my private community. I got all kinds of things like this. I think I have it peppered through the free community too, some stuff like that. I guess not. Well, so yeah, that delivery from the inversion or the 1 hour fair value gap, it's proven to have been pretty dynamic. It was inside the 710 macro. What is that? 10 macro. 742 is also a lot of times a time that I've seen ICT talk about, or 1042 Eastern, as a particular reactive moment price. So there's a couple of different timing elements that are related to things outside of like the macros. Like for example, there's a concept called 90-minute cycles that was talked about by charter students in ICT's charter community. Before he closed the community down, I took screenshots of it, right? So I got proof that it was there, that we talked about it. Then all of a sudden, social media started talking about 90-minute cycles, and like they created something, which most of the conversations about smart money came out of the charter community from people that leaked it, sadly. But yeah, and no worries, Ski. Appreciate you asking the question. But yeah, so I think today's been very eventful. Hopefully you guys have gotten a ton of value from these conversations we've had today. I think that we'll probably put a ribbon on it here if you guys don't have any extra questions. But I hope that you guys, if you feel comfortable, hope you were able to participate in some way. But if you didn't have a chance to participate or nothing lined up, and you were able to sit back and soak in a lot of the things we talked about, that's also a profitable position as well. And you should pat yourself on the back for having that ability to do that, because most people can't. If they see someone else engaging or talking about opportunities, they're focused on how can they get in versus what can I learn from what's being talked about so I can do it myself eventually. So yeah, if you guys have any questions about anything that we've talked about this morning, let me know, right? You can DM me on Instagram. You can leave a comment or something after the video. But yeah, I guess with that being said, we've had a pretty eventful morning, and things are somewhat opening up. But we may end up having a PM session, trading session today, if I'm feeling up to it after lunch. So yeah, with that being said, you guys, God bless you. Appreciate your time. I hope you got value. Don't forget to like the video, share it with your friends. Don't forget to subscribe too if you haven't already. But yeah, with that being said, I will catch y'all on the next one. And yeah, Ski mentioned the free Discord. If you want to be part of the conversation in our free Discord, maybe you can't get into the private Discord. The free Discord has value too. And Ski, I'm glad you get value from that as well. Ski's pretty active there, along with a few others. But yeah, so again, God bless you guys, and I will catch y'all either in PM session today, if I can, or I'll catch y'all on Sunday. Yeah, take care, you guys.